Joining me today is Jason Leong. He is the CEO and co-founder of PocketSmith, which is a personal finance platform. So what was like the first user problem that you were trying to solve?
The first problem to solve was actually my own. In 2008, I just bought my first house, and very quickly my disposable income had changed the cash flow forecast I needed. I could look at my calendar in a month view and figure out, put in my incomes, like when I'm going to get paid, when the bills are going out, maybe how much I'd spend on groceries or entertainment every week. We could make it an app and we could put it out there. The product that we have today is largely the byproduct of customer feedback and really learning that personal finance isn't a one-size-fits-all problem to solve.
PocketSmith is now in almost 200 countries. What did you have to do to get that right and stay sustainable? Do you have any advice on how to maintain and build that trust or that confidence between you and your customer?
When some organizations get so large, you might not be able to interact with an actual human. I mean, I personally get very frustrated when I want to get in touch with just somebody at an organization, and that makes me, not to say distrust, but it certainly doesn't add to the level of trust and empathy that I have with the business. So transparency is so important.
How, if ever, you want to implement AI into the product. What do you think would be the way to do that in a personal finance or investing application?
So I think it's going to be amazing for clarity, for surfacing insights people might miss, for automating repetitive parts of managing money. But it's certainly not at a stage yet where it could take over decision making. The opportunities in personalization with respect, so tools that understand your context but don't manipulate your behavior.
One budgeting myth you retire forever.
Budgeting isn't about deprivation. Budgeting is actually about permission. So you're giving yourself clarity to spend on what matters most.
Hey everyone, welcome back to Next in Finance, where we talk to the builders, the thinkers, and the innovators shaping how the world invests and manages money. I'm your host, Michael Petrilli, and today we're heading down to New Zealand. It's home to breathtaking landscapes, amazing coffee, and one of the most interesting fintech success stories out there, PocketSmith. Joining me today is Jason Leong. He is the CEO and co-founder of PocketSmith, which is a personal finance platform that started as a simple cash flow calendar and has quietly grown into a global tool empowering people in almost 200 countries to take control of their money. Jason, welcome to Next in Finance. It's
Hey,
great to have you here.
hey, Michael, thanks for having me. Really grateful to be phoning in from sunny New Zealand. It's always sunny here. That's what we tell everyone.
That's awesome. I'm over here in sunny California, but in San Francisco, where it actually is cold in the summer. So, Jason, let's just start from the very beginning. So, I heard you say before that PocketSmith began as that cash flow calendar, and I love that visual. But so, what was like the first user problem that you were trying to solve with building the first versions of PocketSmith?
The first problem to solve is actually my own. I had, back in 2008, I just bought my first house, and very quickly my disposable income had changed, and I didn't really know when I could actually afford to travel to see my family and friends again. So I was born in Malaysia and my family still lives there, and travel is a big part of my life. And so when this big change happened, I realized I needed to understand what I was going to have in the future. So I realized that this customer pain wasn't just about budgeting, it was anxiety about time. When those bills hit, when income lands, how much I'm saving, and how that shapes my weeks and months ahead. And we know a lot of people live paycheck to paycheck with no real visibility over the future. That's where the cash flow calendar came in. I didn't want to use a spreadsheet. It was effectively a cash flow forecast I needed. But I thought, hey, if I could look at my calendar in a month view and figure out, put in my incomes, like when I'm going to get paid, when the bills are going out, maybe how much I'd spend on groceries or entertainment every week, I'd have a running balance at the bottom of every day to show me how much I'm meant to have. And so I could tell very quickly in the future how much I was going to have. So that was the original idea for the product. it evolved, and it's certainly not what we had today. Like I got together with some buddies, and we thought, hey, if this visual approach to money, this interactive approach to money could work for us, maybe we could make it an app and we could put it out there. And so we did, but very quickly we heard back from people who said, hey, this is cool. It'd be really nice to have a little bit more information. Can you process our bank statements, or can you take a look at our spending in the past? And so the product that we have today is largely the byproduct of customer feedback and really learning that personal finance isn't a one size fits all problem to solve.
So it started as your own issue, basically,
Mm,
which is how a lot of, I think, great businesses start. And then you realized, okay, there's a lot of people in my life that could also use this.
yeah.
So we definitely need to expand it because it started becoming a business because everyone has different their personal like wallet of financial
Mm,
tools. And that's where you thought, okay, I need to be a business. I need to be able to connect all these tools
yeah.
and really just help build this thing into something global, which is just amazing.
Beyond that,
So was there oh,
oh yeah, I just wanted to say we were enamored of the idea of making something that anyone in the world could use. So to think that we were accidental entrepreneurs in that we had an idea that this is going to be a subscription based business, and we had a business plan, but the sheer excitement of making something and putting it out there and having like someone in San Francisco use it, or someone in India, or someone in the UK, that was super cool, as rediscovering the internet and rediscovering your ability to affect change, to give something to someone there. Yeah, I have to say that the business component was second to us trying to make something useful first.
yeah, that's awesome. I really like that. And was there ever a moment when you guys are building and you realize, okay, this is definitely can be something bigger than just a side project, something that can go from my Excel sheet into a global tool for a lot of people to
Yeah,
use?
it took time, and we actually just jumped in both feet. So it wasn't really a side. We quit our jobs and we piled into it. I mean, it's a long growth story. It probably took us about 4 years before we could pay ourselves. And we were distracted also. Along the way. We built like a free tech incubator in our city here in Dunedin, and we made a lot of friends in the tech space, and we were enamored of the idea of this startup environment. And all along the way, we were continuing to refine it, and it took us a long time to find product market fit. So we never lost hope, but I have to say that there wasn't really an inflection point where we realized this is gonna work. It's almost trying to file a lockpick or something to get that door open. You just got to keep shaping it until it works, and it's something that we still think about today. We're constantly shaping it to make it better, to make it more usable, more appealing to the market. So yeah, it's always been a journey.
Yeah, for those that don't know, PocketSmith has been around for over 15 years now, right?
Yes, yeah, it can
So
nearly drink. I think it's not. It's gonna be 18.
maybe in New Zealand, not here yet.
Is it 20 or is it 21?
It's 21 here, yeah.
Okay, yeah. You can drink milk.
Yeah. Maybe start to drive in some states.
Yes, yes. Yeah, you would trust it behind the wheel for sure.
So I think something else really interesting about PocketSmith, besides it's how long it's been around, kept that entrepreneurial spirit,
Mm.
is that you guys haven't taken any venture capital on. And I think that's something that's pretty rare in fintech, especially today. So I imagine that was definitely could be difficult. There could be some hard trade-offs there. So how did you keep the company healthy and sustainable?
We Where do I begin? Like, we didn't look for investment because we didn't really understand that product market fit. And also, as a small team, we thought, man, we could spend half our time looking for investment, or we could actually just go ahead and build and test and ship. And as I mentioned, we quit our jobs, but what we had to do was to actually find contract work on the side in order to fund the business. So the business has always been healthy in a sense that it's always been self-funding. We've always put money back into the business, and as it continued to grow, we used that money to hire employees, and we paid ourselves very late in the game. But That I think was a bit of discipline that we applied. It's almost like looking at household finances. We didn't really want to take on debt. We didn't want to take on venture capital, not at an early stage. And there was a time when we decided to maybe have a chat to VCs on a year to year basis, but it never felt like the right time. And then when the business became sustainable, we just decided not to. But I think VC funding is an interesting one because you take a look at the environment and you see all these other companies raising money and you think, well, should we be doing that too? But we're so glad we stuck to our
Mhm.
guns. Yeah, it's rare. We're learning that it's rare. You really reap the benefits when you're a mature company because it gives you the independence to make those decisions, to innovate the way you want to. And when you're the only shareholders, you can take some risks that you probably couldn't when you've got other people's money to take care of.
Yeah, absolutely. And ViewTrade is similar. It's been around for over 20 years. It hasn't taken any venture capital or P money.
Amazing. I didn't know.
Yeah, so it's always been self-funded, and it is very rare in this industry especially, but it gives you additional freedom, right? To
Yeah.
do what and take the company in direction that you and your team believe it should be going, right? And be very adaptable. So I think when people consider taking on additional capital, right, you really have to think about if you want to do it for short term, absolutely. But if you have a longer running vision, or like you really want to build a product and are just excited about sharing that with the world, it's great to be able to do it self funded. Not everyone can do that.
Yeah, and it doesn't come without some trade-offs. So for us, I tell people that because the previous job I had was the CEO of a listed software development company. And at 29, I was a young CEO, but at 30, pretty old startup guy. And the at that time in my life, it was that's when you start to really build a career. And so those years of pure creation were incredible. Like we didn't have any customers, and that's one of the best things about building technology is when you don't really have anyone to use it, you can just build whatever you want. And it was so fun. The many times that my co-founder James and I just want to get back to that space where we can be so plugged in the zone, just making things and discovering and learning new things. But at the same time, I was very aware that a lot was at stake in terms of my future because I wasn't earning, I wasn't saving. I still had a mortgage to pay off and things were tight. But what was really interesting was that this was a complete reset of my personal values and also it helped me empathize better with the people we're looking to serve. And so of that time where times were tough, I was stressed about money, but I can't say that I was unhappy. And it helped me really understand my values when it came to money, which is a really unexpected outcome of this journey. And that has been, I think, quite fundamental to how we think about our customers and what they're looking to achieve as well. It's really helped with that empathy building in terms of opening our minds to the diversity of how people think about their finances, what they want to do with their finances, how they think about their lives, and where they want to go. So, in that respect, we've built something that's completely non judgmental, non prescriptive, and really like a playground for you to achieve what you want to achieve using our software.
Yeah, I think that's awesome. And I love those core values that you bring into PocketSmith as a company. And something I thought was very interesting when I first was learning about PocketSmith is that you and your co founder actually don't come from a finance background, which was my initial instinct, right?
Yeah.
We come from a design and a technical background.
Mm.
But as you just said, did that kind of help you with being empathetic to the user because you're building for that everyday user? And I think what were the advantages of actually not coming from a finance background, but building this personal finance
Mm.
application?
I think we're lucky to not be boxed in terms of how we think about finance. So looking at all of the products built by our competitors in the market, a lot of those founders came from the financial services industry. They may have been at a bank and they've said, look, I know the problems that I need to solve for our customers, and this is exactly what they need. And they build it that way. And then plus they've gone and gotten VC money. And so they're committed to that vision and that drive, which is why you've got these super simple tools like mint.com when it was around. It was just simple, directed, but really a machine for advertising for Intuit. And it really didn't serve. There were a lot of people who relied on it, but it could have been so much greater. For us, there's a pro and a con. So like we can really try to connect. I think for us, we knew that we needed to connect a wide range of financial thinking with software, if that makes sense. Like we were
Mhm.
trying to use user interfaces to better describe finances to people. And we knew that people had a wide range of ways of perceiving money. So the calendar is one, we've got different graphs and toggles and stuff. And we did make some pretty amusing, pretty crazy user interfaces to depict the flow of money. That some of which are still in the product, and some of which we've gotten rid of. But I guess that's the other part of it. We gave ourselves the time to experiment and have fun with it. So I would say it's an advantage because I think we weren't myopic in that sense. We weren't given a blueprint for what we needed to solve. We were just listening.
Yeah, that's really awesome. It reminds me personally, I have my brother and sister on the medical field. They don't really think about finances like I do and being in the industry.
Yeah.
And I think having those kinds of visuals and you being creative to make those visuals
Mm,
actually is extremely beneficial to those outside of finance
yeah.
because how my brain looks at it and how their brains look at it are very different.
That's
Um,
100%. Yeah.
and it can definitely help them understand and appreciate what's going on with their money.
Yeah, like we were in Australia earlier this year and we met up with some of our users. And one of our users had a chat to me on the side and she said, "Hey, I wanted to tell you that the calendar UI really changed the way that I thought about money." And she's a person who has dyscalculia, which I've since learned is like dyslexia for money. So concepts around numbers and math don't make sense to her. And was she was in a relationship where her partner took care of all of the household finances and planning, which often happens in most relationships, right? So that one person has is the driver of the household finances. And she was fine with that. And when she went through the separation, she realized that now she's responsible for taking care of her own money. And this was going to be an uphill battle. And when she discovered PocketSmith, this was the first interface that made sense to her. It's like numbers suddenly came alive. And not only did she understand where she was financially, she could plan forward. And that gave her this confidence to take control over her money again. Now, we'd not built PocketSmith to help people with dyscalculia because I didn't even know what dyscalculia was. We've since also learned that PocketSmith is amazing for people with ADHD. Just the way that we explode every possible thing that you could do with it. People love getting into the minutiae and setting things up and then having it go auto. So there have been some really fantastic outcomes from this broad way of thinking about finance. And what we've learned also from this user of ours, she's gone on to be like a fairy godmother to her friends, buying finance books for them and talking to them about money because that's what this newfound confidence has given her. So, what we've learned in addition to this is that when you empower one person with control over their finances, you're empowering a community as well because you're having lift a group of people by giving them an ability to share and to talk about money, which is super important.
Yeah, that's awesome. It's a really great story, and it shows the wide range of people that you're connecting with, right?
Yeah.
Across the whole globe. And I think I that kind of connects back into that idea of scale and how PocketSmith has scaled. So PocketSmith is now in almost 200 countries around the world, which is incredible. But what did you have to do to get that right and stay sustainable as well?
So we grew organically, right? So we're very lucky to be a consumer facing web based product. And so anyone anywhere can really pick it up. And we grew largely through word of mouth. And in order to get to that point, and we weren't looking to scale globally, we just wanted customers and we wanted to pay ourselves. So can we make a viable company out of this product? And it just so happened that the world picked us up. And so we had customers everywhere. The three things I think for us to pull that off sustainably would be empathy and trust and care. So we talked a little bit about empathy earlier, in that we were lucky that right out the gate, because we didn't have a predefined perspective on how people should manage money, we were listening for feedback and we shaped the product around customer feedback. And so that earns us the customers, because when people sign up to the product, they might recognize something in there that goes, oh shit, so empathy. They might sign up to the product, they'll go, I see something in there that I haven't seen in any other products. And I think this melted my mind. But beyond that, just being interested in the human condition, being interested in solving something for the user. So that earns us the customers. The second component, trust, is what helps us build word of mouth. So when someone comes in, the product's reliable, they enjoy using it, the bank feeds work for them, they're going to tell their friends about it. The third component will be care. And we are reasonably high touch for a SaaS business. So about half of our company is in customer service. And the reason for this is that it's a journey for people. They have questions about their finances. They're loading stuff up into PocketSmith. It may be quite complex, and they just want to reach out to someone and say, hey, am I doing this right, or how do you think I should structure these things? And we're right there. So with these three things, it's really helped us build fan bases in different parts of the world, and it helps that we really like connecting with people in different parts of the world as well. So it's completely a virtuous cycle.
Yeah, that's awesome. And so I think I heard you say a lot of your company is the customer support. So you're not outsourcing that.
No.
And what is the value there? Like, why do you find that so valuable? Because obviously a lot of companies are outsourcing their customer support.
And this is probably going to change now with AI being able to mimic humans, but let's put that aside for the moment. James and I, we did the customer support at the very start. Even years in, 3, 4 years in, we'd be up all night, like replying to customers. It wasn't necessarily a chore, because it was really nice to respond to people. And in the process of doing this, we learned that we developed a sort of a voice for PocketSmith, a customer voice, a way to interact with people, a tone, a sense of curiosity that just comes through in the way that James and I write. And as we brought people on board, that kind of culture became a part of how we communicate with our customers. And being able to nurture that in a support team requires a degree of proximity. It's not that we're all in the same room either. We're a remote hybrid company, and we've been that way since the beginning, because we were founded here in Dunedin, our city, and then James moved away probably about 3 years in, and we've been remote since then. And while we have about half the team in the city, we practice a if one person's remote in a meeting, everybody's remote, right? But it still helps to be in the same time zone. It still helps for us to be culturally similar, and for us to put across I guess, a coherent voice. And to that end, having everyone in the same time zone, same cultural understanding, helps us get to that point faster. We'll never say never, but I think at the moment, I guess most people would outsource because of the cost, but we think it's worth employing people that we know and that we can bring on board. It's also really expensive to fly in people from Southeast Asia, say for a
Mm.
for a company conference. So yeah, that's why we've got a Kiwi team, and we're very much a Kiwi company.
Yeah, I really like that. It's you're keeping your brand strength all the way through to the customer support, which,
Mm.
especially I think in a finance app, can be very important because when you do need customer support on a finance app, that's the time you panic, if anything.
That's right.
And having a strong customer support there and being able to trust it, that builds great trust and
Yeah.
great stickiness.
And our customers communicate very well. We often get long form emails, and people who are describing their financial situations in words. That's pretty impressive, and that their comprehension is really great as well. So we do service a tier of customer that has a degree of curiosity about their money, is keen to express, and they feel a sense of safety when speaking and writing to us as well. The Yeah, and the time zone thing isn't too big an issue either. So we're quite lucky that we're a direct to consumer product and not, say, a B2B product that a business is
Mhm.
relying on in real time to. So we know we've got plenty of friends who've built B2B products for SMEs. They may be at the point of sale. And if something fails there, you get some really urgent customer inquiries that have to be responded to. So that's a whole different ballgame. So for us, our customers generally don't mind waiting a half a day or a day to hear back and to continue the conversation. So it's not, can you fix this for me right now? It's more of a, how does this look like in PocketSmith? Or what if I did this? Or what does this mean? How do I structure this thing here? So it's an ongoing, rapport. I like to think of it as we've got a workshop and we've got a pile of super PocketSmith super users inside there, and that our customers can wander in at any point and they can say, hey, how are you building this thing? Or how do I use this thing? And we can engage with them.
Yeah, that's super cool. I like that idea. And yeah, I guess speaking to your point, as VTrade is B2B, we do try to go out and be local to wherever we are working
Mm,
because when you're B2B, if there's a client issue, but also our branding is becomes part of our client branding, right?
mm.
Like at VTrade, we say we're building the infrastructure, the plumbing behind you. It's the stuff people don't see. And so to become part of your branding, we need to be there, right?
Yeah.
On the ground. And that's why we try to do that. Right? It's a little bit of a different idea from direct to consumer, but
Still, though, like
I think
the customer
yeah.
empathy is
Mhm.
strong, right? And being on the ground, particularly when there's a lot more at stake, where your customers are larger enterprises that have a heavy reliance on your product working, and building that trust requires that you've got people on the ground. I can completely see that.
Mhm. So I think I was gonna say new take. So I think PocketSmith is similar to VTrade in the way that it can be inspire that quiet power confidence that we were talking about before with one of your users. So do you have any advice on how to maintain and build that trust or that confidence between you and your customer? Especially because you are connecting to thousands of different financial institutions globally.
Building trust with the customer really, it's something you earn every day because we're asking people to share in their financial lives and not just their data. So, as I described, they might be putting some pretty personal stuff into the product, or they're opening themselves up when they ask questions of our support team. So, being transparent, going back the other way, is really important to us as well. And showing them ultimately that we're human, which is why it begins even on our website. You take a look at our about page. We've got our team on there, but we also talk about our values, and we talk about who we are as people, because ultimately there are people behind every business. And sure, when some organizations get so large, you might not be able to interact with an actual human. I personally get very frustrated when I want to get in touch with just somebody at an organization and I'm deflected at all these angles. I can't pull up a chat box or I can't find an email address because they're just trying to minimize customer contact. And that makes me, not to say distrust, but it certainly doesn't add to the level of trust and empathy that I have with the business. So transparency is so important. One example I've got is that we're really honest about our connections to banks. Some are better than others, and we set clear expectations with our users from the outset. So we connect to 14,000 banks using 5 different aggregators, going to be 6. And at any point in time, there's going to be something broken in between PocketSmith and the aggregator and the bank, right?
Yeah.
And that's just the nature of things right now. And so Canada, for example, has been super challenging. Like in 2023, there was a change to the landscape of bank feeds there as they clamped down on data sharing because of cybercrime. And so they pushed really hard in that direction. And having offered bank feeds to Canadian users for over a decade, when these things started failing, we had to start to open up a conversation with them because we were frustrated as well. And so what we did in order to continue to build that trust, because hey, you've been using PocketSmith, the product is solid, but the plumbing that brings in the data is now questionable. Sometimes it's going to work,
Mhm.
sometimes it's not. It's really frustrating for you. We understand because you're trying to get real time visibility over your money. So we had to bring them along for the ride. Number one, what's going on in Canada? Why is this happening? Right. So, yes, the banks are trying to protect you from cybercrime, but they haven't got open banking. And so they've just cut you off at the knees, and we feel you. And what can we do? So keeping people up to date on what's happening, on what we're doing, offering them a discount, giving them alternatives for getting their data into PocketSmith, like via file uploads. So building trust is all about honesty and transparency. It goes both ways. It's, I think, absolutely okay to show some vulnerability as a company as well as the individuals behind it, because ultimately we're all human, right? We're all trying to do the right thing. And over the years, we found that being a bit human, conversational in our tone, being open about our challenges, builds more confidence than being perfectly polished. So trust isn't just a feature, it's a habit. Every email, every support reply, every small promise that we keep, it all adds up.
Mm. Yeah, and I think that definitely gets into that conversation about open banking and customer data. But I think one thing I want to mention about PocketSmith that's very cool is you guys are not selling the customer data. And
No,
I think that's really helps with that customer trust. I'm going to give you all my banking information about what I buy. Obviously, that'd be very hot for marketing to use.
yes.
But you say, no, you're going to give us that data and you're going to pay a subscription fee to pay for the services. And
Mhm.
that's going to be, there's that value add for sure of not being inundated with marketing
I'm really glad.
about what I buy.
Yeah, I'm really glad
Yeah.
you see the value in that. It's taken us a long time to almost get through to the consumer that data is valuable. A couple of things really played in our favor. Not taking investment was probably the biggest one in that regard, because obviously, if people are putting money in your company and they want to return, they want to look at the multiple routes in which they can actually see growth in your company. And when you're sitting on a lot of data, that seems like you've got to weigh up principles versus return. And but I suppose there are businesses that could have put that out there. We are going to be a principal business. We're not going to sell data. I don't know if they'd be able to raise funds as easily if that was the case, because they might be seeing as leaving money on the table. So it's not right or wrong, but it's just absolutely a choice for us. Certainly, I would prefer to use a product that didn't sell my data. So we want to have a product that doesn't sell customers' data. We want to go to sleep at night feeling, knowing well that we are doing the right thing by users as well. But for the longest time, it was hard to make that point because so many products, particularly the ones from the States, did offer their services for free in exchange for being a data, like brokering the data or selling them ads, and people were fine by that with that. However, we've never actually managed to make math work. So we take a look at large personal finance tools, PFMs, and we're like, how are they even staying afloat? Because the numbers don't work. Ad revenues will not keep your business alive. And sure enough, COVID happened and interest rates went up, and one by one, our competitors started to fold. And what was even more evident was a lot of them couldn't turn on a fee for service model, a subscription model. It's maybe because they didn't think their customers would ever want to pay them for their product, but that's not a good sign of a healthy business either. So we were in market for over a decade before this correction happened, and people realized that, hey, personal finance is no different to any other consumer facing product that you want to support. You pay a subscription fee and you support the ongoing commitment to building a product that takes care of your money, that takes care of you. And yeah, so I didn't think I'd see the day, but it's happened. The market is a lot kinder to us now.
Yeah, I think especially a lot of times in the States, we say if the product is free, actually you're paying with it through your data.
Yeah, you're the product.
Yeah, you're the product essentially.
Yeah.
But I think it's amazing that you guys have that value that you've basically you outlasted all those others and you're also upfront with it. And a lot of those companies that are doing it for free, they do disclose it, but it's in the fine print. And I think that doesn't help with that trust aspect between the customer and the application. But talking about open banking, which for those that don't know is it's the idea that as a customer, I have the right to share my banking data with a financial application like PocketSmith. The banks will set up an API to allow that to happen. It's supposed to democratize financial data, but I think depending where you are in the world right now, it's looking different. For sure, like you just mentioned with Canada. So from your vantage point from PocketSmith, but in New Zealand and Australia, so what's been working and then what's lagging and what do you think is going to happen next in
Mm.
regards to open banking?
What's working is the principle. And that's the idea that people should have a right to safely share and use their own financial data. So that's super powerful. And in Australia, open banking has created real momentum. Their consumer data right open banking legislation is, I think, just on 5 years old, if not 6 years old now. So they've got accredited data sharing, they've got clear rules for participants, both the data holders like banks as well as companies like us that interface with the data. And there are opportunities for fintechs to build trusted tools on these data rails. So that's really good. What's lagging is the accessibility. So the system still feels like it's been built for industry and not for the everyday person. So to your point, you still have to explain what open banking is because it's a relatively new concept for consumers. And that's one of the biggest challenges that we've got both in Australia and in New Zealand, which is sure, open banking is cool and we're all nerds about it, but how does it impact the everyday person? How does it make somebody's life better? And that is often a challenge for people in industry to describe. They're like, oh, but we've built this most amazing thing. And when people say, what can it do for me? They'll go, I don't know, find some tools to use it. You can get this, the broad words like there's better competition, better options, better visibility for your money, but just how you use it is still quite vague. I like at a conference earlier this year, I talked about open banking now being like the early days of Wi-Fi. And I don't know when you first interacted with Wi-Fi, but I'm old. So this was in, I'm thinking 2003, I had, I had a MacBook. It wasn't called a MacBook. It was called a PowerBook. It was a
Mm.
PowerBook back then. And I had read about this Wi-Fi thing. It was called 802.11b back then. It was a mouthful. And I was like, man, I want to get in amongst this 802.11b. I'm going to be like the coolest kid on the block. And so I bought a router and plugged it in to my modem. And then I had this card, a PCM CIA card, slotted into the side of the laptop, and it had an antenna that I had to screw into it. To get it live, I had to go into the system settings, network, click on enabling the thing, I don't know, add a whole bunch of parameters, and then suddenly I could get internet over the air. Mind blowing stuff, right? And I was like, this is awesome. This is going to change the world. And so I was telling my friends about it. I was so excited. I'm like, hey, this is new thing, Wi-Fi. It's gonna be amazing. You can get internet anywhere. And my friends are like, wow, that's great. But why would we need something like this? Because
Yeah.
in 2003, Facebook wouldn't be invented until 2004. There was no such thing as like the cloud. There were no smartphone. iPhone would only come out in 2007. And even then, there was no app store. You couldn't upload your photos anywhere. And most people, like their computers, big beige boxes with heavy monitors that were just attached to one place in the house. So the
Mhm.
infrastructure was there, but there wasn't a way to engage with it, and much less a way to build on the ecosystem. So very early days. So that is the problem that we're having with open banking right now. You and I are like, yes, we get what it can do, but for most people, it's not as simple. Like it needs to be as simple as going up to your device and clicking on
Mhm.
turn it on open banking, and a whole bunch of tools pop up. But right now, you've got to go through a consent flow. You've got to understand what it means. It's pretty heavy stuff. So, looking at Australia and New Zealand, the comparison between the two has been really interesting. Of the open banking regimes we operate in, there's the UK, Australia, Europe. The US there's a bit of everything in it, right? So I don't think there's regulation quite yet. But the comparison between Australia and New Zealand has been interesting. So Australia has been regulatory driven. So the government one day said, look, open banking is the future. We have a vision for how it can empower Australians. Let's set up a framework and some rules and let's get cracking. In New Zealand, it's been market driven. There's been discussion about open banking, becomes, hey, should we do this thing? Then the bank stepped up and they said, hey, leave it with us, two finger gut, and industry to develop the standards. And while plans have been laid, open banking has been slow and there's been very little show for it. And what's worse was, until a few weeks ago, the proposal that the government put forward and what they've been advised to do is to charge for open banking up to 1 cent per API call or up to $5 per bank per month per customer, something like that. So if you're a PocketSmith customer, you'd pay you with four banks, you'd pay an extra $20 a month to access your data, which is unheard of. Like, the whole point of open banking is to provide you free access to your own data. But here, the banks managed to convince the government to let them charge for that data. So this is where industry-led initiatives go really sideways. And so what has happened here in the last 4 or 5 months is we, the fintech industry, spoke up quite loudly against this. And we're like, this is not right. We'd be the most expensive country in the world to do open banking in. This would squash innovation. So if you're a startup like PocketSmith looking to bootstrap your way into the industry by making something cool, you can't, because you'd have to fund your way into paying for data feeds. And furthermore, in this day and age where there's this K-shaped recovery and a real divide between the wealthy and the poor, what they're saying is you can only manage your money if you can afford to pay for it. And that was so patently wrong. I'm still really angry about it.
Mm.
But the government then came back and they said, we've revised it. Now the banks are prohibited from charging for access to data. So that's a win for us. But what we've seen is it is really important for governments to recognize that open banking and access to data is a right. It's your data, and your ability to understand where your money is going and to be able to make good decisions based on your money should not be something you pay the banks for, given that in this day and age, you have no choice but to bank with a bank in order to live in modern society. Anyway, I'm going to get off my soapbox. So, what I hope is coming next for open banking is that continued focus on consumer benefit and making sure that open banking actually improves people's lives, and it's not just a compliance activity. It should empower choice and innovation, and it shouldn't gatekeep it. You can tell I'm
Mhm.
passionate about open banking.
Yeah, I also think like open banking is awesome and right to the consumer data. It keeps fintechs like PocketSmith up. And then especially if one country, it's a global pursuit. If one country like New Zealand is going to do that, right? As you said, we become the most expensive country. This doesn't make sense, right? We're connected. I know we're on an island, but we're
We're
connected.
all connected, yeah. And our customers have accounts in different countries. So one of the things we do is like
Mhm.
you could, like, we've got global citizens. So you may have an account in Australia, New Zealand, the US, and the UK. We pull it from all of these places so you can see your money in one place in one currency. But yeah, implementing fees in one locale starts to make things quite complicated. And I think that's what's happening in the US right now. Is it Chase Bank that may be looking at charging fees for access to data?
There are still, when we use apps like a PocketSmith, something like my Apple Card is not going to share its data with you,
Mm,
right?
yeah.
So I think because there's not that any regulation in place formally right now. Also, a lot of data laws are state based
Mm.
currently. Like my right to my data in California is actually a little different from other states. That's going to complicate the situation a little bit as well,
Data
at least.
sovereignty is an issue. It feels like a bit like the Wild West at the moment. And I don't know. I think people need to just stay focused on what it is we're doing this for. And if it empowers the user, if it gives them better knowledge of their finances, because I think that personal finances have just gotten so complex so quickly. Just in the last 10, 15 years in particular, there are more ways than ever to earn and to spend on the internet. And people are getting left behind, particularly when at the other end of the scale, there isn't a clear curriculum for personal finance. There really hasn't been one. Most people enter the workforce not even knowing how to buy a house. What's a mortgage? How do I save? How do I invest? And now there are all these options that make it easier for someone to get stuck in a really bad place. And I think the focus really should be on how do we actually keep empowering people and giving them the best opportunities for their lives based on on their finances. And they may not need to know everything about their money, but they sure shouldn't be left to have their finances, I don't know, a neglect of their finances leave them in a poorer position because they haven't had the right advice at the right time.
Yeah, or we give so much access now, right,
Mm,
to people to invest, which is awesome, I think.
yeah,
Like things like fractional shares didn't exist 10 years ago.
yeah.
Mobile apps that you can trade on also, there were big commissions. So it's become the bar into investing has lowered so much, but it's brought up this new issue, as you said, and everyone deserves the right to their data so that they can be taught how to actually go about managing their own finances. And I think that's the goal of PocketSmith. And through that, we're just enhancing everyone's financial knowledge and really improving their life in the long run. So I think you talk a lot about a term called household CFO.
Yes.
So I really like that. I think it's awesome. I would say in my household, it's 50-50 because my wife used to work in banking. So we split the finance.
That is awesome.
But
That is really rare. I think like having an equal share in that financial decision making is it's amazing. It's so empowering for our health.
it
So
is, yeah.
congratulations.
Thank you. Yeah, I think it's pretty awesome. And one thing I'm interested about before we unpack the term household CFO, do people around the world treat that? Are there countries where a lot of people are co CFO? Are there other countries where one person takes it over? I know what's interesting is the States, usually the husband is the driver, but in China, actually the wife is more the driver of the finances. It's different everywhere, and I'm curious if you see that in your own user activity.
We do. We don't really pull out the gender of the user in the product because we try to keep things as anonymous as possible for our users. But we do know that our user base is largely male skewed. But that's because I think we're largely focused on the West and English speaking countries. But it's fair to say that it really varies from household to household. So for of the customers I've spoken to, I just as much find that a man would say my partner or my wife is the household CFO, or a woman might say to me that my husband or my partner is the household CFO. So I think it's really hard to tell, but the main thing is that someone at least recognizes that there is a person in the household who's just quietly balancing the bills, remembering those renewals, managing the financial rhythm of the family. We see that, like, we call them the household CFO because we think that they're largely unappreciated. Yes, they do the job. Not all of them love doing this job, but somebody needs to do it. And I think what we're trying to do is just shine a light on these champions of the household finances and to say, hey, look, we see you, we've got you, and we know what it is that you're trying to do, and we're here to support you.
Yeah, I really like that, and it shows the importance too, right? CFO,
Mm,
important
yeah,
role, and I think in the home, you're not driving your finances the same way you would drive business finances, obviously.
yeah,
Taking on debt isn't seen as much of a positive personally, but for business could be great.
yeah.
So I really love that household CFO term. It
I'm
really
glad to
struck
hear
a
it.
chord
Yeah,
with me.
it's a fun one. It's a fun one, and it's a conversation starter. It took us a while to think about who it is that we're serving, and they come in all shapes and sizes, all ages as well. The household CFO could be as young as 16. The people out there who are like the Gen Zs, who are much more financially capable than I ever was, even at 26 or 36. There is so much information out there that compels people to be smarter about their money, more curious, and more capable. So, yeah, they really come in all shapes and sizes.
I think PocketSmith also helps someone, and the household CFO can start from not because I have a finance background, right, or a banking background. It's just because I start to get an interest in what's going
Yeah.
on. And that's where PocketSmith can really help me become that household CFO and gain the confidence to have those conversations with my partner, with my children about
Mm.
finances. Because I think it should be more open, at least in the States. Sometimes parents want to hide what's going on.
It's the same here.
But yeah, when you really share it and help each other learn and understand what's going on, I think that'll help everyone in the long run, which I think is awesome.
Yeah, yeah. The ability to communicate about money is it's something we're not taught either, and it goes right back to how I talked about when people are so diverse. There are really deep held values around money that some people are aware of and some people just aren't. But it can be detrimental to how people choose to run their lives or the choices that they make. And so part of what we get to do is to show someone what it is that they value through the data. You can learn so much about just yourself when you take a look at your finances, right? Yeah, yeah. That's part of the fun of it, and the money really is a conduit towards helping people be more in tune with themselves and their ambitions and their goals. Yeah, and that's what we're really all about, the human condition.
Yeah. Coming back to PocketSmith as a fintech that's been around for a long time, but also been successful. So, how have you balanced that innovation and profitability, right? How did you grow sustainably, but also you were able to stay independent? And what practices helped you to get there?
It's a good question. There are a lot of things we've had to say no to just because we have constraints, but people talk about constraint being really important for creativity. So, for a
Mhm.
start, I think sustainability comes from knowing who we serve and why, and we're not chasing growth for its own sake. And I think that we're quite lucky, again, being quite a mission driven business that has very patient shareholders. We get to take our time to, I think, really reflect on why it is that we're in business. And so the independence here gives us the time and the freedom to make some long term decisions and to build some depth into the product instead of having to chase those quarterly spikes, which I imagine are the bane of a lot of high growth companies. And so we treat the profit as a creative constraint. It forces us to be thoughtful, to be efficient, and to be ultimately user driven. I'm not saying that innovation has to be expensive, but it just has to be meaningful. So some of our best ideas come from listening closely to the community, but not really spending big. The practice that has held us really steady is that we've got a really good balance in between ambition and care and technology and humanity. And that's what lets us innovate without losing ourselves. The main thing is always remembering our core values, why we're in business, who we're here to serve. I know Steve Jobs talked a lot about being at the intersection between oh, I'm gonna butcher this one. Being at the intersection between technology and the liberal arts, something like that. One is it's a really beautiful balance, and we're grateful to be here. We never thought that in the fintech space that we could be this balance because typically when people think about fintechs or finance, it can be a bit dehumanizing, which is not entirely true of all financial businesses. But the financial sector has a reputation, and we're very lucky. But we're careful to ensure that we maintain our humanity, and so that gives us the space to balance that innovation with our profitability.
And so I really love that. I love that you guys are mission driven. You stick to that. And that idea of in constraint, we can find great outcomes and be creative, right? There's a book called Beautiful Constraints that's just about that. And that's something as a small company, we also really try to appreciate and do. And it's when you stop looking at it as negative
Yeah,
and start looking at it as a, okay, I'm here and let's see everything I can do here. It really lets you be creative and focused.
yeah,
I think that's what really drives that kind of entrepreneurship within that constraint.
100%. And I feel very comfortable talking to you about this, knowing that View Trade is a self funding business that hasn't taken investment, because what it means is that this flows through your company's DNA and everyone treats your capital with a degree of respect. It treats your decisions, your interactions with each other. It really defines you as an organization. This constraint, I'm putting finger
Yeah.
quotes in the air, right? It may be a constraint on in one lens, but ultimately you get so much out of it that you couldn't possibly pay for. Like you couldn't retrospectively engineer a company that has the values that are born of being self-sufficient after the fact, I don't believe.
And we appreciate it, but do you think industry is starting to appreciate that, right? That sustainability over speed?
I Yeah, I hope so. I'm not entirely sure. it's such a strange time to be in tech. We're right now, and I guess I'm putting a pole in the ground with a flag and saying, Michael, you and I are here in October of 2025, where we're wondering if there's an AI bubble and the market is super heated with just a few companies that are meant to be world changing. These companies have slurped up all of human creativity in order to produce facsimiles of it, which are very good. And this is peak high growth, full funding action. And I don't know, people are starting to question whether or not this unconstrained growth is actually good, that we haven't taken a step back. And I'm pushing into an area here where I'm still actively considering it, actively thinking about it. I haven't really got any conclusions, but anyone can see that we're really moving maybe too fast at this point in time. What's been interesting to me is we were recently in Singapore for the Asia FinTech Awards, and we were very lucky to meet Laksh, one of your directors, your managing director, if I
Yeah,
understand it correctly.
I
And
love Black.
yeah, and he was part of a roundtable where we met a bunch of fintechs as well. And there, in amongst the people that we spoke to in Singapore, it was quite people were really amused to find a self-funding fintech that was profitable, because there seems to be, like, I think people are quite aware that there are many fintechs that are not. I haven't really got a finger on the pulse of what's happening over there, but I can only surmise that it's expensive to build a fintech, and that with all the capital that you throw into it, looking for that next bit of innovation that's going to get you ahead of the competition, it must be really hard to stay ahead of the pack. But yeah, I rarely look over the other side of the fence. We've got so much to work on ourselves over here. But I'm just really grateful to not to have to think about a runway, and to, yeah, to gradually be building in that product market fit.
Yeah, I think it's also about, yeah, the times that we're in right now. And I think we're definitely in hypergrowth, and taking on outside capital has seems like a almost necessity when you see everyone else doing it. And I think because a company like PocketSmith, who you trade, started over 15 years ago, was a little bit of a different situation back then. Not that there wasn't capital to take, but I don't think it was as abundant.
Yeah.
And that is part of it. And also being strong enough to just stick to your gun. Say, okay, I'm going to run this company, I'm going to do it profitably. And that's my constraint. And I'm going to, yeah, make it work. And that's what you at PocketSmith were able to do, which is awesome.
Yeah, we're grateful.
So now we get into the topic that we can't not talk about, which is AI. And but I think where we're going is you're definitely going to take a very responsible approach
Yeah.
to how, if ever, you want to implement AI into the product. And so, what do you think would be the way to do that in a personal finance or
Mhm.
investing application without eroding user trust or agency, being careful about it?
So the definitely the wrong thing to do would just let it go run rampant over your money.
Yeah, just let it run.
I think we'll apologize if we say, "Oh, I'm so sorry that I just blew your entire portfolio, but let's try again. Let's try again in 30 years." I think AI, and don't get me wrong, I'm not a hater. I think AI is an amazing tool. I think it's going to be amazing for clarity, for surfacing insights people might miss, for automating repetitive parts of managing money. But it's certainly not at a stage yet where it could take over decision making. And I don't think it ever should, really, because the goal is in co intelligence and not replacement. I have heard fintechs talk about equating money management to self driving cars, and it's quite scary. I still wouldn't put my faith in a self driving car right now. I know that I'm blown away when I see Waymo's cruise around San Francisco, and yeah, it's amazing, but it's not perfect technology. And I don't know. I think that you need something close to perfect in order for you to trust it with your money. So, right now, anyway, I think the opportunity is in personalization with respect. So, tools that understand your context, but don't manipulate your behavior. And that's really challenging because AI can be very suggestive and it can drive what it is that you think you might want to do. And the less informed you are, the more likely you are to be led down a certain path. I think there is an opportunity for personalization, tools that understand your context without manipulating your behavior, because AI can be very convincing. We already know of cases where people are bonding with chatbots and having them suggest ways to live. And so that, again, it's about making it so that it doesn't have the ability to damage someone. So at PocketSmith, we have always been, as technologists, I suppose, we've been so wary of it. We know what it can do, but also we ourselves have treated it with a lot of care. Our golden rule at PocketSmith is that we don't use AI to craft things for us, but we use it to improve our craft. So we've
Mm,
taken a measured approach so far, and we are, first of all, using it within the company. So each team uses it differently. Our support team uses it to craft better messaging. We've used Grammarly for ages. I suppose Grammarly is a kind of an AI. Our marketing team uses it for ideation, for content creation, and engineering uses it to help with code. So we've been measuring its strengths and weaknesses so we can better understand how to introduce it to our users. Well, the first thing we've got in PocketSmith is a beta feature called AI experiments, where you can choose to share your data with ChatGPT within PocketSmith to get it to do a bunch of things. So with your consent, you can say, send it a bunch of transactions and ask it
mm,
questions about what it does. Sorry, about what it sees. You can get it to perform some tasks on it, but really not too much beyond that. And it really is just a toy at the moment. So, what we think, the other thing that's been interesting is that we've released AI experiments like over a year ago, and we were asking our users for feedback, and we do get feedback from some people, but people aren't, like, our user base aren't really tremendously excited about AI in their finances either. So at this
mm,
point in time, anyway, our customer segments isn't particularly excited about AI rooting around in their money,
mm.
and probably with good reason. So yeah, we're going to keep an eye on it. I think like this will come, the general awareness of it will come as people get more comfortable interacting with it. And there'll be ways for us to compress the user experience. Say you can query your finances in natural language and have PocketSmith deliver something to you. So that would be, I think, the next cab off our rank, but we're still short of getting it to perform actions on your finances. And I don't know how much you've had a chance to play with things like agentic AI, or I would be quite hesitant to have an AI plan a holiday for me and book my flight tickets because
Mm,
I still want some control.
yeah.
And I don't think I'm that busy that I can't at least enjoy the process of planning my own holiday and picking my seats and that sort of a thing. But who's to say? I don't know, 2, 3 years from now, things could be quite different again.
Yeah, absolutely. And as you said, that agentic AI using your browser was recently released
Mm.
this week. Yeah, very interesting idea. And I think the other interesting idea was that comparing that wealth management to self-driving cars. And maybe we could get there one day. Tests I've seen run with the current AI that's out there, trading money is not doing well, and then it's looking to use margin to get back the
Oh
gains.
my
So
god.
a little bit of a toss-up right now, but obviously I think it'll keep getting better. Where I do see value currently in is with that wealth managers using it actually to gather data faster, essentially. Summarize this earnings call for me. Can you tell me which stocks have, maybe you can say, which stocks have the highest PE in the S&P or something like that. And it'll pull all the information. It's great at looking through 10Ks
Mhm.
on the SEC website, stuff like that. But I think for someone like a PocketSmith user, they don't really look into that information. They wouldn't really know what to do with it. And I don't know if they even really have to know. to manage their finances personally. So we have to see where it gets, if it does get better, and also we always still have that hallucination problem right now where we say, all right, can we get that margin of error down to something more reliable? Potentially.
But
And that's where we're at right now, right? On October 2025.
yeah,
And there's a lot of progress. Things keep getting released. Even today, there was more stuff released around analyzing financials using AI. So we'll see where it's at. But like you said, for right now, that retail average person that wants to manage their own finances, not too interested currently in
yeah,
AI.
yeah. And I think it comes with that trust aspect of it. And I think some people will be bullish on AI, but they probably know. I think our users who get into PocketSmith want a degree of control, and then we often equate them to people who like playing with Lego rather than buying something off the shelf. So they want to make something and they want to see how it's put together. They want to be able to take it apart. And AI is almost the antithesis to that. Although, to your point, what it can do and what we use it a lot for is in doing a lot of the menial work, origination of documents, or compressing the amount of time it takes to get the insights, while being aware that it could be making things up as it goes along. And it'd be interesting to see if they could well and truly eliminate hallucinations, because that's how AI works. It's pulling things together and spitting out an answer that it believes is the correct way to answer your question, rather than what the truth of the answer might be, because it really has no idea of what truth actually is. And yeah, how we get around that, what's really interesting as well is that many people who build AI products don't really understand what happens in the black box either, and how it comes out with these insights. So yeah, it will be really interesting to see. So yeah, I think anyone in finance will probably be using it quite pragmatically. There are really high profile lessons out there. So I don't know if you've heard about, they charged $400,000 for this report, and it got published. And it wasn't until a researcher looked at it and realized that some of these references were fabricated, and people didn't proofread it, and the authors should have proofread it. And nobody's saying you shouldn't use AI, but I think that these high profile incidents that show where a lack of care could very quickly impact people out in the public space. So yes, thank you. That's absolutely Deloitte, and bless them for being a case study for the rest of us.
And I do think that's where AI has the problem that a human employee needs to take accountability, right?
Yeah,
It doesn't take accountability. It can't by
that's right.
nature. And so that is one of the important aspects that I think just needs to be very considerate, right? That make the judgment call, take accountability, and be able to actually make decisions. And then, yeah, take accountability for those decisions is just a very human aspect that a
Yeah.
computer can't do.
Yes, 100%. Like this is not a Jesus take the wheel situation. You still have to have
Yeah.
both hands on the wheel. And so yeah, we do say humans hit publish, AI does not. We need to actually remember that.
And so, last question here before our lightning round
Ooh, yeah.
is, what advice would you give a fintech builder in today's market?
Oh man, I don't know if I'm qualified for to give fintech builder advice. There's so many routes to success. From our lens, we think it's important to be patient. And I think at View Trade, you guys probably agree that real impact takes time, and hype probably fades a lot faster than trust grows. So think about building something useful and not just impressive, because the world doesn't need more fintech for fintech's sake. I think if you're building a fintech today, we'd encourage you to think about your users' emotions, because money is never just about math. It's always about outcomes, it's about lives. And you need to really have an interest in that. Yes, there are jobs in finance that are all about making money from money. Absolutely. But I don't know if that, again, we're looking at it from a direct to consumer lens, right? The user really has to be at the heart of the experience. Profitability isn't boring, it's complete freedom, as you'll attest to. It lets you steer your own ship instead of renting somebody else's. But above everything, you just got to stay curious. because the moment you think you've made it, the industry will change again under you. And here we are talking about the next wave of innovation in AI, and just being aware it's exciting, it's a living, breathing thing. If you treat your problem scope and your business as something that has got a life and potential and a personality, and you treat it with respect, I think you'll find yourself in a good place. That's the advice.
All right, lightning round,
Oh, wow.
which
Here we go.
new segment for Next in Finance. We haven't done it before.
Really? Okay, cool.
So you'll be the first beta
You're not
test.
going to zap me with lightning. That's not how this works, is it?
No, it has nothing to do with real lightning. It's just about speed.
Oh, thank goodness.
So just say the first thing that comes to mind after the question.
Okay.
So, one budgeting myth you retire forever.
Oh, that budgeting isn't about deprivation. Budgeting is actually about permission. So you're giving yourself clarity to spend on what matters most. That's one myth I retire forever.
The most underrated personal finance metric for households.
That goes right back to the problem that I had at the very start, is just cash flow timing. Most people don't get into trouble because they overspend. It's because they don't understand the timing of money in, money out, and that doesn't line up. The most underrated personal finance metric is understanding your cash flow.
A small product decision that ended up being a game changer.
Okay, yes. Now, I wish that I could point to one small feature that would change the game for us, but we're a company that invests in small but incremental changes over time. But I'll tell you about one feature that I love, which is a small feature that is like when you look at a total figure in PocketSmith, like it might be at the end of a line for a month or something, you can always click on it to pop up a bubble up to see the transactions that are in there. So you can always see the transactions that amount to the total of that number that you're seeing just by clicking on that number. I wish that more products had that.
A great drill down.
Yeah.
And finally, what does your calendar show about next month's money move?
If you asked me a couple of months ago, it would have been like too many flights, not enough weekends at home. I'm restoring a couple of 100-year-old houses. There's a lot of project management and a lot of payments to contractors. But next month, nothing. Nothing out of the ordinary, which is a blessed relief. It's just life as per normal. And I get to save again, which is wonderful.
Nice. A
Mm.
clean month with saving.
A clean month. Oh,
Jason, this was great. I really enjoyed our conversation. We went way over time, but it was
oh
awesome.
gosh, we have.
And I really loved hearing about PocketSmith and the cash flow calendar idea to New Zealand and then expanding across the world. And for anyone else tuning in that wants to learn more, you should definitely check out pocketsmith.com. And if you enjoyed my conversation with Jason here today, definitely follow Next in Finance, and we'll have more founders on with more stories and insights from the front lines of fintech. And Jason, thank you again for joining us.
This has been a blast. Thank you so much, Michael.